Hello student, welcome to International Finance class in semester 1. My name is Songjun Jo. My office is in AMBS building 5.006. I want to introduce myself briefly to you. I obtained my PhD in financial economics on empirical asset pricing from Columbia University, New York in 2007. Before joining AMBS in 2009, I worked at Deutsche Bank in New York as a researcher. What I did there, I developed foreign exchange, so-called FX strategy, using information from bond market and other signals. Some of the material I'm going to talk about in this class will be based on the asset pricing I learned from my PhD and some of the trading strategy I developed in Deutsche Bank. Anyway, so this is my email address. In this class, I'm going to aim at the following things. I'm going to help you, student, to understand what are the successful FX trading strategy and investment strategy in international stock market. Specifically, I'm going to talk about arbitrage and FX speculations. Don't worry if you don't understand what this means. I'm going to talk about this one using example and derivation later on. And then I'm going to talk about successful investment strategy, so-called value, size, momentum, profitability investment strategy later on. Why we want to learn about these? First of all, if you wish to become a knowledgeable investor in FX or international stock market, you must know what are the well-known trading strategy. And if you want to get a job in financial industry, so this is based on my previous experience, in particular investment firm, you need to know what these are. Anyway, to achieve this goal, I have selected 6 main topics, and I will explain that in the next slide. In this class, in semester 1, I'm going to first talk about fundamental issues in international finance for 6 weeks, and then I'm going to talk about more advanced topic for mostly international investors for 4.5 weeks. So what is the topic 1? I'm going to introduce what are the FX market and what are the important terminology you must know. What is the meaning of FX risk? So these are very basic. You must understand to study all other topics. So you have to revisit topic 1 again and again if you're unfamiliar with some concept later on. And in topic 2, we're going to talk about covered interest rate parity and uncovered interest rate parity. We'll think about how to make arbitrage profit using CIP concept. And we're going to talk about speculation in FX using UIP concept. Then I'm going to talk about some successful trading strategy in FX market. And in order to understand that, we're going to talk about the concept of risk premium in FX market. And then in topic 3, we're going to talk about what is the equilibrium value of exchange rate using so-called purchasing power parity. And then we're going to combine covered interest rate parity and uncovered interest rate parity and purchasing power parity to talk about real interest rate parity. So why these are fundamental issues? No matter what you do, you become international investors or you're working for any multinational companies, you must know these 3 topics. In particular, in semester 2, if you don't know topic 1 to 3, you will get trouble. So you must understand topic 1 to 3 very clearly. And then part 2, we're going to talk about advanced topics. So first one we're going to talk about is the topic 4, international portfolio diversifications. I think you learned portfolio diversifications using domestic stocks. We're going to extend that to international setting. And then we're going to talk about international asset pricing model. You learn so-called CAPM and farm French model using domestic securities. We're going to extend that to international setting. Finally, I'm going to talk about empirical evidence on CIP, covered interest rate parity, UIP, uncovered interest rate parity. Why these are important? Because these are related to very important investment strategy in FX market. So we're going to talk about these in this semester class. And throughout the class, I want you to imagine you are investors. You're trying to invest into either currency market or stock market or both. So we're going to talk about first arbitrage strategy in FX market. What is the arbitrage? So you need to find 2 equivalent assets with different price. So you have one asset here In one market, you can buy and sell this asset with $5. In the other market, you can buy and sell this asset with $10. So $5 and $10. Obviously, we have different price for the same good. In this case, you can do arbitrage. You can buy this asset in this market and sell that right away in the other market. You can make $5 profit. You're making money without taking any risk by implementing this strategy. We're gonna take a look at so-called triangular arbitrage in topic 1. And then we're gonna talk about covered interest rate arbitrage in topic 2 and topic 6. Now, obviously, this kind of opportunity is very rare and it only happens temporarily because of temporal imbalances happening somewhere in FX market. And these are not available to you. These are mostly available to high frequency traders, which means they trade at nanosecond interval. They buy now and after 1 nanosecond they sell. So something like that. And if these arbitrage opportunities is persistent, then something is wrong. This kind of opportunity should be very rare, but if there is an opportunity like this for a longer period, there must be other fundamental reasons. So we're going to talk about this fundamental reason in topic 6. And then we're going to talk about FX speculations. So these are not arbitrage. You need to take risk. You're going to invest into something, but you are exposed to risk. And if you make some money, that could be the compensations for taking risk. So we're going to talk about first the carry trade strategy, which means you borrow currency with low interest rate and you invest into a currency with higher interest rate. Don't worry if you don't understand this now. We're going to talk about this one, very detailed example and derivations in topic 2 and topic 6. And mostly this is a short-term trading strategy, which means if you implement carry trade strategy, you should terminate that within few months, 1 year at most. And then we're going to talk about so-called PPP based strategy. So PPP means purchasing power parity BPP. We're gonna talk a little bit about this one in topic 3. So we usually say this is a long-term FX trading strategy, which means if you buy a currency based on these strategies, you have to terminate that after 3 or 4 years. So you have to keep doing the same strategy for a long time. And then we will try to understand the rationale behind the profitable FX strategies. So normally academics think about risk premium as a reason for this profit. So we're going to talk a little bit about that in topic 2 and topic 6. And others believe it's not risk premium. You're not getting compensation for taking risk. Rather, something is wrong in the FX market. Market inefficiency. We're going to talk about this one in topic 6. If you are interested, you can take a look at various ETF implementing FX trading strategy. So visit this place to see what are the traded ETF in FX investment. And then finally, we're going to talk about successful international stock market investment strategy. First of all, why we want to invest in international stock market? There should be some rationale for that. So we're going to talk about international portfolio diversifications as the reason for that in topic 4. And what are the popular profitable strategy in domestic stock market investment and international stock market investment? And why those strategies are providing persistent profit? In order to understand that, we need to understand international asset pricing model. We're going to talk about some international value effect, momentum effect, and other effect in topic 5. If you are interested, take a look at this website. There are many ETF available implementing various strategy in stock market. By the way, once you learn topic 5, international asset pricing, we can answer to the following perhaps interesting questions. Sometimes you want to join a very profitable hedge fund, but you need to pay a huge fee to join that fund. Then you may want to ask, do we need to pay this huge fee to this hedge fund? Is it worthwhile to do that? Or let's say you just develop a potentially profitable new strategy. Then you may ask these questions. How do I know if I have a new profitable strategy? Is this really new? Well, once you learn international pricing in topic 5, hopefully you will be able to answer these questions. I will provide some example to help you understand and answer these questions. Anyway, in semester 1, for part 1, the main textbook is Baker Hardrick International Financial Management. This book could be accessible via reading list online on Blackboard. You can find more detailed instructions on how to access this textbook on Blackboard. For part 2, we don't have textbooks. Only chapter 13 of Baker Hardrick will be useful, chapter 13, and there are some readings and some fun readings related to part 2 material. Anyway, I will provide more information on this later on. Now, method of lecture delivery. So we have 10 lectures. All lectures are face-to-face lectures. Detailed lecture schedule are provided in the next page. And also I will explain several feedback methods, including online workshop, online or offline office hours, discussion board, and revision class in the next slide. So I'm going to use this feedback method to help you learn the material appropriately. So this is the tentative lecture schedule. So in the first class, I'm going to talk about welcome document a little bit and then topic 1. And in the next week, I'm going to continue talking about topic 1 and a little bit of topic 2.1. Anyway, every week, Monday or Tuesday, I'm going to announce to you what I'm going to do in that week's lectures. Now let's talk about feedback method I'm going to use. Starting from week 3, October 8, to week 12, December 10, except for the reading week, I'm going to have online workshop via Zoom. I'm going to provide Zoom link later on. So every Tuesday from 2 p.m. to 3 p.m. Basically, I'm going to explain how to solve selected practice questions. And you can ask any question related to practice questions during this online workshop. And I'm going to have face-to-face or online office hours every Tuesday from 3:30 p.m. to 5 p.m. For these office hours, please book a slot via Soho, and there will be 15-minute slot for each student's appointment. Now, if you cannot make this hour, you can send me an email and we can meet maybe online via Zoom in mutually convenient time. And there is discussion board on Blackboard. Now, you can ask any question related to lecture material or practice questions or exam or anything using discussion board. I encourage you to post your question here because I will regularly monitor the discussion board and I will provide answers to your questions. If you have some urgent questions, you can ask your questions by email. But many of you have similar questions. So before asking me any questions, just take a look at the discussion board on each topics. And only if you cannot find the question you want to ask there, ask your question. Finally, there will be a revision class on December 13. The time on this class is already in your timetable. In this revision class, I'm going to provide a very important tip and a hint on the exams. So what I expect from your answers on the exam, that kind of things. I will provide that information in the revision class. So what's gonna be the assessment method? The exam is going to be 90-minute online exam with 15 MCQ questions plus 1 short questions. Once you start the exam, you have to finish it within 90 minutes. In the first part of the exam, you need to solve 15 MCQ questions randomly chosen out of 45. In second part of the exam, you have to choose 1 short question out of 2. 50 marks for MCQ and the other 50 marks for short questions. I will provide more detail in the revision class on December 13. By the way, for semester 2 exam, you need to ask that to Ian Garrett at the beginning of semester 2. In the first class, I'm going to quickly review several folders available in course content on Blackboard and then explain briefly what a typical class will look like. Thank you and see you in the first class.